Day night. I'm Tom Sosnoff, and I'm here with this is First Call. I'm here with Chris Vecchio, Ilya Spivak's in the green room right now, and we're ready to talk markets for the next 35, 40 minutes. We'll see what's going on. Chris, you ready for a Sunday night opening? Uh-oh.
Ready for a Sunday night opening? It looks like the market's going to be flat.
Yeah, flat to down, maybe down a hair on the opening. Um, we're very excited here in Chicago. Justin Turner just hit a walk-off about 5 minutes ago, so Cubs win. And I know you don't care, but I live in Wrigleyville, so I have to care. Um, but I think they're going to actually. It looks like Nasdaq's probably going to be down about 20 handles, and the S&P's maybe down about 10, which would put them kind of back near where they were trading just a couple of minutes before the close on Friday. We were down about 100, let's just say 107 to 110 handles on Friday. So you're talking about, that's the biggest down move we've had in a while, almost 2%, or 1.5 to 1.75. That's a pretty big down move for us.
It's a big down move. We're coming into the fun part of the year, Tom. Seasonality says that volatility starts to rise here. Also, the market was just so overstretched, so stretched, 90th percentile, 93rd percentile for CTA positioning. Maybe it was just time for a pullback. I know a lot of people were looking for a market that was, a little too frothy last week, and perhaps this is going to be day three, Mr. Sosnoff.
Well, let's be fair here. We've been going up pretty much straight up. I don't think we've had 3 consecutive down days since the April lows, or maybe there was one time, but we haven't had, a couple of days like we've had the last couple of days. We haven't had any really down moves since the beginning of April. Last couple of days, we got a little bit soft. There was a lot of weird stuff that happened, earnings wise, it figures earnings were all good for Friday morning and the market gets killed. And then there was just a lot of other kinds of shenanigans. And whenever you start to see that stuff happening, I don't know, it's kind of got to get you a little bit nervous. I would think, forget about valuations in general. Just the market's just, the eye test would tell you the market's stretched. I think a couple of weeks ago, Chris, you and I said on the show on a Sunday night, we're like, show me 10 stocks you think are undervalued. Just eye test. Forget about, I don't care about the fundamentals or technicals or anything like that. Just show me 10 and then, but show me 100 that you think are overvalued. And whenever you get that way, we're usually right. We're usually early. We're usually right.
You mentioned that earnings have been coming out good. I think this is a really important dichotomy to understand about the market psychology right now. We've had about 2/3 of companies report earnings so far for the second quarter. 82% have been beating their estimate, which is above the 5-year average and the 10-year average of 78% and 75% respectively. But this is really the issue. If you're missing, you're getting absolutely crushed right now by the market. The scorecard is horribly lopsided in one direction. Winners, losers, terrible here. The numbers that I have from FactSet, Tom, if you are a company right now that is, and it just slipped off my screen, of course, while I'm saying this. If you are a company that's missing right now, you are losing about 5.6% in the 2-day window before and 2-day window afterwards from your earnings miss. That's way bigger than the 2.4% average loss that companies are seeing over the past 5 years during that same window. Yeah. Winners, right? You're only seeing a 0.9% increase. Typically, it's about a 1. So winners not being rewarded as much, losers really being walloped right now. Price for perfection, right? Price for perfection.
I have another theory on this. These companies have got really good at lowballing expectations. Companies have just become very skilled. They used to be, they used to not have as much emphasis on earnings, so that earnings were just kind of like, listen, when CFOs would be like, just push out the numbers, they are what they are, and we'll give whatever guidance we have to. But companies have become very good, and CFOs have become very good at lowering expectations because CEOs want to look good and they want to beat on the next quarter. So I wouldn't put that much faith in those, we always are significantly more outperformed to the upside than miss. So I don't think that's really the key. Here we just opened, and it's kind of just what we said. S&P's down 5 or 6. They're all over the place right now. Now they're down 4 or 3. But S&P's open, well, Right now, they're down 3, and Nasdaq's down 10. It opened down 20. Russell opened up a couple pennies, and bonds, after a huge rally right into the close, they are down 3 ticks at 115.18. Bitcoin opened up, gold opened up 20 bucks, silver opened up 16 cents. The euro opened a little higher today after an explosive move on Friday. The yen opened a little bit higher, and you know, so actually S&Ps now are unchanged, and the Nasdaq's only down 7, so it's kind of like a, let's call it a flat opening. Um, but you know what's interesting is that for the first time in a long time, I started to read a lot of stuff over the weekend that was basically just um, just talking about a couple different things. And I thought I'd bring them up with you. One was
Sure.
that discussion I just said, where CFOs and companies have gotten really good at lowering expectations, so it looks like it's an earning beat, but in reality, it's not. Like I think Apple did that this time. At first glance, it looked like, oh, this is a good number, and then when everybody broke it down on Friday, the stock ended up down $5. You know, Amazon, I think they thought they had a pretty decent number, and the stock was down, $19 for the day. I think Coinbase thought, based on what they pushed out, it looked like they were kind of like expecting, you know, maybe we're down 5-10 bucks, but our numbers are pretty good. Stock was down 60. I thought that all these digital asset companies, they've been so outrageously priced. If you want to talk about price to perfection, MicroStrategies and MicroStrategies, Robinhood, um, uh, Coinbase, those companies have been truly priced to perfection. And those are the ones that kind of took the biggest, I feel like they took the biggest hit. Um, but you know what? I like it when we have some big hits because it gives us a chance to, you know, maybe a little two-sided trade here.
Yeah, it's interesting that you say that about Amazon missing. I saw some people this week quipping about some of the tech earnings where the depreciated cost of the servers and GPUs that they're using is basically extended over 10 years when you look at their income statements. When in reality, for a company like Meta, they're turning over their GPUs every 2 years because the technology just keeps improving. So they have to get the new ones. And so this isn't my sense, but I do see enough people out there talking from like the financial reporting and analysis perspective. Like it seems like the CFOs have done everything they can to paint the tape and the window dress to make the earnings look as good as possible. Going forward, though, it's a different story. Companies are being decidedly more conservative. And, what else do we have this week that can carry the flag of this market, Tom? I'm looking at the earnings calendar here. Palantir on Monday, AMD Tuesday, Wednesday, McDonald's and Disney, Uber. Thursday, Eli Lilly, Friday, Lamar Advertising Company. So this
Yeah.
doesn't feel like it was last week.
No, and nobody really cares about Disney and McDonald's. Those won't move you know, those won't move anything. Nobody cares what the Dow does based on those stocks. Yeah, the S&Ps are trading thin tonight. They were just down 12. I mean, they were up 50 cents, then they were down 12 a second ago. Now they're down 6. So they've been very thin, very choppy tonight, very thin. This is clearly a market that's, trying to decide how much follow through there's going to be from Friday. I do not think it's early enough to even consider nibbling here. I mean, that
Neither
down,
do I.
yeah, I mean, 62.50 from, what are we, off the highs, a little less than 200, 200 S&P points. That's less than 3%. That's not an entry point for me. Like, I don't know what you think a reasonable sell off in the market is, but if it's not somewhere between 5 and 10 and at least 10% for me, if I'm going to buy anything, then, you know, I just consider it just two-sided choppy trade. So we're nowhere close to a point where I think anything is remotely oversold.
No, and with Friday and the pullback, I mean, I will admit I mishandled some of my equity longs last week that I was trading in and out of.
But I
I was
think
riding high.
everybody did. Everybody did.
I covered part of my position on Friday, and then I had these zero DTEs on Friday that were deep in the money and then expired absolutely worthless. And so on Thursday, excuse me, at the end of the month. And so coming into Friday, just given the seasonality, I've never really had a good run in recent years, personally, being long stocks in August and September. Getting long stocks in October has worked out swimmingly well for myself. So I've just been a little bit more apprehensive. I had no equity long deltas on Friday coming into non-farm payrolls, and now I'm looking at this market and could it bounce from here? I see it a place on my screen, both on the Nasdaq and the S&P, where maybe. But if we're not holding here, why not get a flush back below 22K, 2150 or 21500? Excuse me, the Nasdaq. Why not back down to like 6,000 or so in ES? Give us another 3%. That would be a 5 to 7% move off the highs in the big indexes, and at that point, nibbling seems a little bit more reasonable.
Well, what I liked about Friday was there was really heavy volume in
Hmm.
both the futures and the options world. I think, we didn't break any records, but there was really heavy volume across the board, which I like to see, especially on kind of like the first or second down day, because that generally means to me that, you know, there, we're not done yet. We'll see, but I don't think we're done yet. And there's I think in general, there was the first time we saw market down, bonds up big. So it was almost like a normal, like the old school normal inverse relationship between bonds and stocks, which was kind of nice to see. Brought back some memories of how things used to be. And
How they should be, right?
how they should
Economy's bad. Forward returns for stocks are going to be worse. Lock in your bond returns.
Well, there's no question that this administration's been trying to send a message that the economy is strong, and the economy is not strong, and the dollar is not strong. And
I've been dying to know what you think about what happened on Friday with the BLS commissioner, the head statistician, being fired because she didn't give Trump the numbers that he wanted to see.
well, the lucky thing for you is that is the topic of my cherry bomb tonight, and
Mm.
it's already been submitted, so there's nothing I can do to change it at this point. And it's a little bit of I take a vicious shot at the current president of the United States, because what happened on Friday was one of the most pathetic things I've ever seen politically in my entire career. So we can talk about it more this week, and I'm sure people will. But you know, this is this is America. We don't do that. That crap doesn't fly here, or it shouldn't. Let's put it that way.
Sure enough. All right. Well, let's move on then. We have earnings here this week. I mentioned a few of the names. Disney, McDonald's, you said aren't going to move the needle.
I don't think so.
Uh, Palantir has been one of these high flying names that's gotten everyone's attention. It's kind of a meme stock in a certain way.
Oh, I think Palantir is one of those fringe stocks. I wouldn't call it a meme stock, but I would say it's a fringe stock that is very closely tied to, you know, it's very closely tied to the current administration, and it's very closely tied to kind of what's happening in it. It's kind of paints I think that it paints a picture. It's actually a pretty good measure of what's going on in this country, because Palantir, I feel like it trades almost tick for tick with what people are thinking. I know that sounds kind of crazy, but Palantir is one of those stocks. I'm not going to give it to. I don't have very many other stocks like Palantir, and I think it's one of those stocks that's kind of in its own little world. It almost feels to me like it's like a scout, and it's out in front of the market, and it's also another one of these stocks that's fully priced, but it relies so heavily on government contracts, so heavily.
Yeah, it just got a $10 billion contract
Of
announced
course,
last week.
of course. That's why the stock was only down $4 on Friday. But I mean, they're throwing money at Palantir. It's almost like something. I don't know. I got a weird feeling about it, but that's all.
I'm curious then, if you think that Palantir is a scout for the market, how does that change your overall view on equities? If we think that perhaps a pullback could be coming here over the next few weeks and various positioning is situated to that effect already, does the lack of a down move in Palantir suggest that the broader equity move could be a little bit more shallow?
No, I just think Palantir has got a Palantir has a weird little floor, just because
Okay.
of some of the stuff that's going on recently. There seems to be buyers below the market in there, but I also think that you're going to start to see, you saw some of the key players roll over on Friday, and I don't think these stocks come back like literally overnight, but there was a lot of damage done. I mean, across the board. I mean, there was basically, other than Costco, I don't even know really of any stocks that really, other than Costco and Reddit, which had earnings on Friday. I mean, Reddit was unbelievably strong. But other than Costco and Reddit, I don't really know many stocks that had rallies on Friday. And the market, I didn't think it handled it very well. I didn't think there was any rallies intraday that were interesting at all. And I did not think the market, I think the market's going to try to rally early this week, maybe tomorrow morning and maybe Tuesday morning. And how well those rallies hold up, if they hold up at all, will determine what happens later on in the week.
You mentioned what companies did well on Friday. But the only two that came to mind were Reddit and Wingstop. I guess a lot of people are sitting around eating wings off their bellies like otters while scrolling the internet.
I don't even know what the symbol for Wingstop is. What is it?
Wing, they got a good
Oh,
one. Nice ticker.
oh, I've never traded Wing. I don't even know. I can't even tell you what's trading for. I'm going to put it on my watch list.
It's a
Um,
$362 stock now, naturally.
Unbelievable. Yeah, I've never traded it, but yeah, I mean, I did trade pretty much all the earnings trades last week. I would say from an earnings perspective, it was a tough week because there was a couple of outlier moves and there was some, I would say it was not the best week for earnings. I would say the outlier moves, like for example, in Coinbase, in Microsoft, in Meta, in Reddit, those outlier moves, there was more outlier moves last week than we've had all the other earnings weeks combined. So I don't think last week was really a good week for earnings. I mean, forget about the results, forget about how anything did. I think it was a really tough week. We had more stocks that went outside of their expected range last week than we had the entire last cycle. So last week was a tough one for earnings plays.
Tom, we're going to bring in Ilya in a few minutes, and let's keep the bonds and FX conversation for him. But before we get over there, there's some things to talk about in the commodities, I suppose. The news flow around Russia, Ukraine the past few days has picked up. We've actually seen volatility bump up from in the teens back up into the 30s here during the course of this news flow. It's a 35.4 IVR. I suppose what I'm getting at is the difference between equity index volatility on an IVR basis and crude oil is starting to narrow because equity vol is pumping up. Do you think it's worth taking a look at oil and other commodities right now while you have equity vol on the march higher?
Oil traded really rough last week. It had some huge outlier moves to the upside and then back down to the downside a little bit. So crude oil was not easy. In the 5 days last week, three of them were outside the expected move significantly. So oil was a really tough trade in either direction. You could
Hmm.
get caught short on the way up and then caught long on the way down. I thought oil was almost an impossible trade last week. I thought gold was a little easier, except it even had some big moves. But crude oil, next to impossible. Bonds, if you were long them, it was an easy week. But if you tried to trade them neutral, another tough week. So I would say that commodities in general, and forget about the US dollar. The US dollar was almost untradeable last week. It was directionally, it moved around so much that there was no way to, volatility just exploded everywhere. So I don't think it was an easy week for commodities unless you were trading, the stock indexes and unless you were leaning a little bit short. I think it was I think it was easiest to lean short in the US stock indices. And I think everything else, unless you were like leaning long in bonds or doing something else directionally, man, it was a tough one. I thought really tough. And even tough if you were trading stuff like, Bitcoin and something like that. I mean, that had a
Sure.
nice little, $6,000, $7,000 sell off from the top. I don't know that there was an easy commodity last week, and forget about copper too. It's almost untradeable. Natural gas is about to break $3. I mean, there was some challenges last week. And so I can tell you right now that I don't have a short premium position in futures options that had a good week. Not a single one.
But yeah, I'm thinking about myself. I've been trading short iron condors and crude oil consistently since the Israel-Iran war ended. And even last week with Friday's move, where it basically gets back to the midpoint of my range, I'm looking at the volatility expansion and I made no money, even though the market
Oh
net
no,
net really hasn't moved that much.
no
So
chance, no chance last week to make money selling premium in any commodity that I can think of, unless you had direction on it. I don't think there was a single futures option that I can think of where vol came in. It came in the bonds, but on Friday again, bond prices exploded. But vol came in the bonds early in the week, but that's about it. I don't think it came anywhere else. And I would be, yeah, I don't think it was a good week for short premium trades in any of the in any of the futures options. In some of the stocks, I think it was okay early in the week, but by Thursday, Friday, it got tough, man. It was hard.
It did get tough. So before we bring in Elliot, one last question here.
Yeah.
Dr. Sosnoff, I'm sitting in a short iron condor right now in natural gas. Natural gas continues to just defenestrate me from my past few trades. Do I get out here or do I keep playing this because it's a 42.1 IVR?
Yeah, first of all, the IVR is high. Second of all, you have plenty of time to expiration.
Mhm.
Third, it's defined risk. So why would you touch it? The only thing you could possibly do is, depending on how lopsided your iron condor is, you could roll your call side with the spread a little bit lower. So
Mhm.
like if you have a big put spread and a tiny call spread now, you can roll your call spread down a little bit and take a bigger credit in. But there's no reason to even consider, you know, IVR is high, plenty of time to go. No reason we would ever take that position off because you don't know what's going to happen. Just lower the call side a little bit.
There you have it. Stay mechanical. Tom, what do you say we bring in Ilya and start talking about the US dollar and bonds here, which we haven't covered yet today?
Yeah, sure.
Ilya, welcome to the Thunderdome.
Gentlemen.
2 men enter, 1 man leave.
There's three of us here.
I know. Well, I'm just repeating history. I mean, yeah.
Okay.
Yeah.
All right. Good weekend, Ilya.
Yes, actually, it's a beautiful sunny weekend here.
Yeah. Yeah, I had just a great day yesterday. Got some yard work done. We went to the pool for the day. I went to a neighbor's
Yeah.
house for a dad's barbecue, steak and beer.
Fantastic.
Then watched a movie last night. And I gotta say, it wasn't I these Now You See Me movies. I watched the second one. It wasn't a good one. I hadn't seen it before. It just wasn't
Yeah.
good. It wasn't good.
Yeah. I haven't seen a really like I was just on plane rides to New York there and back. Probably the best movie I watched was the Led Zeppelin documentary.
You know
There's
what's
just
funny?
not much there.
I just saw that. It's great. I liked it a lot.
It's really good. It's really good. No, you know what? Scratch that. Working Man with Jason Statham was very kind of classic
I didn't see
escapist action.
Jason
Done well.
Statham plays the same character in every movie.
Yeah.
But that's why it's great.
But I didn't see that, but I did really enjoy the Led Zeppelin documentary.
It was so well made. I really enjoyed it.
Yeah, I enjoyed it too. Yeah, every Led Zeppelin fan should watch that. All right, Ilya. So, I mean, the big explosion last week was in the bonds, and now
Yeah.
they're back to a level at 115.20, where this would be a very accommodating price level for the Fed to actually, I would say here you're pretty much flipping a coin. You're 50-50 with the odds on favorite that they will lower rates if they can stay over 115 and let's say 115 and a half, 115.20. And if they get over 116, I think it's almost a lock. What do you think here?
Yeah, I mean, I think at this point, you really are reminded again and again and again and again that when the Fed gives you what they think they're going to do, and then the markets do what they think the Fed is going to do, the reaction function at the Fed is slow and they don't change their mind that much. But the markets are, of course, open every day and they jump around and there's a lot more noise. I think the Fed is basically on course to do what they've been saying all year, which is to cut 2 times, probably in the back half of the year. There's no meeting in August. So we'll get one in September and then we'll get one in October or December. I think the markets now think probably October. But yeah, I think they're going to do exactly what they've said all along, which is to cut by 50 basis points in the back half of this year.
Yeah, I agree with you. And if that bond step here, which is why I think the bonds are a buy on any dip.
Yeah, I agree.
That's been the easiest to me. That's been the easiest trade out there. It's just buying the bonds on every dip. That's been the simple trade. Hasn't failed once this entire year, and that's been the easiest trade on the board.
When you say buying bonds, is that buying calls, simply long futures, or you mean selling puts?
You can do it however you want. Delta's delta. Doesn't matter.
Okay.
Sell puts.
Well, and
sell puts.
IV has been so low.
Spreads, buy bonds, whatever it is. It doesn't matter.
Okay.
A delta is a delta. It doesn't make a difference. What matters is what product you use. but it
Right.
doesn't make any difference how you do it. Um, it's been the easiest trade, I think, on the board, and and as long as all this Fed chatter and talk just stays on front page type stuff, it's the liquidity's in there. I mean, massive liquidity in the bond options on Thursday and Friday, massive liquidity in the note options, which was nice, ZN and ZBs, and that's been the easy trade. The hard trade here is going to be the S&Ps. That's going to be the hard.
I've been sitting in long positions in the long end for almost a month now, and I still have like 47 days to expiration. So I've been just building tons of duration into everything to sort of feel out the market because it's been so jumpy. It's finally starting to work. There's no reason in my mind to do anything but just sit in the bonds, and when they give you a chance, add, because this looks like it's going to be a run now. Maybe not immediately, maybe not tomorrow or the day after,
You know what?
but
Here's the thing, Ilya. You didn't get paid for doing that this entire year. So
no.
the hard part for traders is that it's easy to sit back and say, you should just add. But the reality is, every time the bonds got up to 115.5, where they are now, or 116, if you sold out your longs, you have had six
Yes,
chances to reload. And
yes,
so for the passive longs, it's been a crappy trade all year. For the traders who have bought every dip, it's been a great trade.
yeah.
It's not that easy. I don't actually like the passive long side here. I like you sell them into the rally, you buy every dip.
I think at this point you're starting to get to a place where you're absolutely right. It's been in a range basically since mid-April after the Michigas, and from here now,
Just use the word Michigas.
I did, and I'm
You have
running
to
out of.
explain that the Yiddish doesn't go good with our
I'm running
Italian.
out of euphemisms to call what that was, and so now I'm looking at it, and I think maybe there's a breakout now. Maybe
Yeah, but
a
who
trend.
cares? Who cares? It hasn't that having that. Maybe there is, but who cares? It
Mm-hmm.
hasn't worked so far.
Yeah, that's why I asked if deltas are
True.
deltas, Tom, because I'm thinking about like my own struggles in gold over the past few months. Gold's been terrific to me this year, but the past few months, Ilya and I have both been bullish. He's been
Yes.
short puts and I've been long calls, and he's made money consistently since April in gold. And I have not, even though we both have, the delta is delta kind of view. So that's why I'm thinking here. I see something that's at the midpoint of its trading range for this year, both in notes and in bonds. I'm personally leaning directionally neutral. I don't see us getting up to 121 in the next month and a half. And it feels like there's still a little volatility that we can sell up there. So maybe this thing rallies further. But getting up to 121 means like 4 rate cuts before the end of this year.
No,
And that's
the low 120s probably means 2 to 3 rate cuts.
okay.
Yeah.
Yeah.
Well, and to Tom's point, right? If you're not long bonds from lower levels than here, this would not be the place because you're basically sitting at the top of this range. So either you'll pull back, which I don't think we're going to do, or you'll break out. And that'll basically reset risk reward for you. Either way.
Oh yeah, we held off a conversation here on currencies, but we come into the week where the dollar is gapping open lower right now. Euro's higher, yen's higher, pound's higher, all out of the gate.
This is one of the most exciting things for me now.
Yeah. So the volatility's here though, Tom. I think that's the main point. While we're seeing pockets of volatility in other places, bonds and notes still in the teens, the currencies across the board, euro, yen, oh, not the yen, but the Canadian dollar, the pound, the Aussie, you're getting a little bit more than that here.
Yeah.
What's your take after Friday's big reversal in the dollar? Is the dollar bottom finished?
I mean, you got more. There's actually another huge up move tonight. I think the dollar had its dead cat bounce. I mean, I don't know how else you could look at it. The dollar had a really nice bounce, almost, whatever, 3,000, basically 3,000 points and, or 3,000 bips. And, now we just had almost 2,000 points to sell off again, or just under 1,800. The dollar's weak. The dollar's weak, and the question is, when will the U.S. stock market pay for the weak dollar? Like, I understand that the weak dollar has supported the stock market, but the whole narrative that US stock market has been strong, so the economy has to be strong, I don't think that flies with me. I think what's happened is the US economy is
Yeah,
weak, but people think they're buying stocks. People outside the US not using US dollars think they're buying stocks at a 15% discount from where it was earlier this year. So I think they think things are cheap, and then that's a good place to listen. You'd rather buy dollars where they are today than dollars where they were buying them 6 months ago. So I think
absolutely.
that that's been supporting the market. And I think that, when you go back and you look at different times in history, when the dollars acted this weak, this poorly, um, I mean, you can go back and a lot of people blame the crash of 87 on the weakness in the dollar. Let's not forget, the
The Plaza Accord, yeah.
super weakness in dollar has led to some really unsettling moments in the market. And I don't think that you don't hear enough chatter about, oh, you know what? I mean, for people that think, oh my God, the market's just off all-time highs. Well, it's just off all-time highs, but the buying power of the US dollar is down by literally 15%.
Absolutely. I mean, that's one of the things that in my mind, I mean, obviously Chris and I harp on it endlessly, but you don't hear it in the wider narrative that actually the stock market rose much less than the dollar fell in the first half of the year, almost double. So look across indexes, you got maybe somewhere between 5 and 7% on each one of the majors in the first 6 months of the year. Once all the tariff back and forth was figured out, at least in that version of it, sort of April onward, and the dollar was down almost 14%. So if you were long in anything but U.S. dollar terms, you lost money.
Yeah, it hasn't been the easiest year for investors, and I think we're forgetting that too. I saw a really interesting report from Deutsche Bank over the weekend. Ellie, I'm going to forward it to you.
Yes,
That even though the dollar's down because of the differences in inflation, the Chinese yuan's real effective exchange rate is actually weaker than the dollar's has been throughout 2025. So
that wouldn't
you
surprise
think
me.
you see all this dollar weakness, it's going to help bring back manufacturing. How did the PMI data this week shows that manufacturing is not
Absolutely not. That's
coming
not
back
moving.
here in the United States over the last few months as a result of the tariffs. So more fun in the barrel here. Tom, we have 2 minutes left. What would you like to talk about as we go into the close? Because it seems like we've ticked every box. It's a light open. S&Ps are off by zero point 0.1, NASDAQ 0.13. Earnings this week aren't that heavy. The macro calendar is not that significant after we finish acronym week. What's the number one thing traders should be worried about in the days ahead?
Well, what they should be worried about is that we had a pretty ugly close to last week. We had kind of the first, I mean, you can go back for essentially, you'd have to go back to April. So you got April, May, June, July. You have 4 months where since the beginning of April, we really haven't had a downtick. And we haven't had like any kind of a sustained move outside of like, 2 or 3 crappy down days. We finally had a little bit of a sell-off towards the end of last week, but I don't count that yet for anything. But I think that it does raise at least a little bit of you have to think about it a little more cautiously now, because for the first time you had pretty much across the board selling, and you had a little bit of across the board nastiness. And I don't think we've been able to find sellers in this market for almost 4 months. Like we can't,
Hmm.
wherever you
Yeah,
look, you can look under any rock. There's no sellers anywhere. Everybody has been so comfortably long. And I think for the first time, sellers came out of the woodwork, especially on Friday. And I think, you know, a lot of what's held this market up is, the the idea that maybe all the earnings will be good, maybe that things are gonna, interest rates are gonna start to go down. I mean, it's just a lot of different things. Like some of the political turmoil can't be any worse. It's got to get better. And I think last week was
hmm,
maybe a little reminder that maybe the risk of this market being overpriced is a little greater than people were actually pricing into the market. And maybe it is a little frothy. And let's see, let's see how shaky it is here. Let's see how thin it trades this week. I mean, are we going to have some up days this week? No freaking question about it. Are we going to be up big tomorrow morning? We could be. We didn't close underwater on Friday, that's for sure. So we're not like starting with we're not starting at a really cheap price or anything like that. But there was some damage done on Friday. Anytime you get stocks, we talked about it, like Amazon down 20 and Roku down 15, and you're starting to get a lot of these things, Coinbase down 63, and Apple on good earnings down 5. And you don't get a lot of Apple earnings turnaround intraday. When you start to see that stuff, you're like, oh man, maybe there are sellers out there, and at least be aware of it. I don't think you have to trade that way, but be aware of it.
Yeah. I mean, I think the interplay between assets this week is going to be really interesting. Obviously, the dollar got smoked as stocks fell on Friday. I actually think that's probably a dynamic that's going to go away. And we're going to get much more, especially if stocks keep going down, we're going to start to get into a sort of risk aversion classic. And if you look at what that is, that's bonds up, dollar up, stocks down. And if you look at where the dollar stopped as it was selling off on Friday, it just pulled back to the underside of the range, but then it held. And it did not cross any Rubicons back into that kind of area where it started to form this bottom. So in my mind, one of the more interesting things here will be, especially if stocks start to break out, is if the dollar rallies as they sink, because then we could be in a whole other type of correlation one environment.
Tom, I got something for you here as we close this out. For only the third time in history, tech stocks now are 2 standard deviations above their long-term valuation relative to the S&P 500. The other 2 times come in the early 1970s, and of course, the dot-com bubble. And we've seen research that shows the AI bubble is now bigger than the dot-com bubble. So, fun week ahead for stocks, Mr. Sosnoff. We'll be here live all week, though. What time does programming start tomorrow?
I just have one comment on this.
Sure.
It's going to be really interesting a couple of years from now to look back and see if they call this the AI bubble. There was no doubt in my mind in 2000 that we were going to call this the dot-com bubble. I mean, it was so obvious. Like it was unsustainable at any level. This is different to me. And this doesn't feel like it's the same kind of a bubble. Like that felt it was completely unsustainable in 2000. And we were just waiting for the market to roll over and crash. It took about 6 months longer. In 2009, the down move at that point seemed unsustainable because it got beyond ridiculous unless the whole country was going bankrupt. So there are different times in history we go back and look at the markets, we think, oh, you know what? This kind of makes sense. But right now, I wouldn't say that I have that same feeling that the AI bubble is, I wouldn't say that it's a bubble. I'd say it's frothy. And I'm not sure that we're going to look back I'm curious how we're going to look back at this 5 years from now. And we're going to go, was this a layup? Did we all just freaking miss a layup? Was this like completely obvious that Palantir should have been sold at 160 and Nvidia had no right to, we didn't need to have Microsoft as a $4 trillion company, Nvidia as a $4 trillion company. Are there any other $4 trillion companies? I'm not sure. But the idea of a $4 trillion company is just unbelievable. And the question is, are we going to look back at that and say, I can't believe that there was 2, 3, 4, 5, $4 trillion companies? Or are we going to look back and go, I can't believe those companies used to be 4 trillion, now they're 6 trillion?
I think it's both. I think it's both, because if you look at every single time that you have one of these transformative technologies, there's the hype cycle, and then it turns out it overshot. But then that doesn't change the fact that the long-term adoption becomes then after that the inevitable thing that it was always going to be. And I mean, railroads, telecoms, whatever. So
I don't disagree with that at all, by the way.
yeah. So I think it might be a bubble, but that's not going to change the fact that AI is it's a speculative valuation bubble. The technology itself is obviously not a bubble.
No, we're not going back into the cave on this. It's here. Yeah. It's here to stay.
I mean, if you want to think, Chris, about last week,
yeah,
I would think the thing that was most scary about last week is that you had like a $33 IPO that essentially trades up $100 2 days later.
Figma.
And yeah, I know, but you're talking about like to me, that's bubblish. Like there's nothing, there's no other way to explain that. That's bubblish.
You can't.
That
see
seems
the
to me like
prior
greedy.
chart.
That's
Just
greedy.
these two bars.
This has been happening a lot more recently, and maybe we should talk about this week on Let Me Explain or Truth or
Yeah.
Skepticism, right?
Yeah.
But I've seen this a lot, and I got to get the data to back this up. It feels like companies are being mispriced intentionally, so that the insiders are able to just sell out. You're getting these big multiples out of the gate on some of the IPOs, where it's like, why were they listed at $35 a share when it's closing at 110?
Well, the insiders usually can't sell. So it's not.
No, not the company insiders. I mean, like the people at the Morgan Stanleys, the Goldman Sachs of the world who are going to sell shares to their clients.
So none of those people can sell. The only people that can sell are the people that they actually give the stock to.
Right.
So, like their best customers.
So so they're giving their customers at 35 when they know it could IPO for 100.
Right. They're just rewarding their best customers. You're not
That's my point.
You're not rewarding the company. You're not rewarding the company employees. No. You're not rewarding the people that bought the stock early because it's restricted for 6 months. So you're just rewarding the people that can sell it on the first day on the jump, which is your own best customers, which is absolutely bullshit in my opinion. But it's also who's buying this stuff up $100. Like who's buying?
Tom, what? Not me. Not me. Tom, we're running a little bit over here. What time do we start tomorrow morning?
In London, 1:30 a.m. Central Time, or 2:30 your time on the East Coast. But in Chicago, 7 a.m. tomorrow morning.
Excellent, sir. Thank you again. Good to see you. Ilya, good to see you as well. Everyone, thanks for watching First Call. Go have a nice night. See you bright and early.
Ciao for now.